Hello traders, hello traders. The title of the video is Bearish Elliott Wave Count, a strategy made simpler than never before. Now, it's almost a year that an Elliott Wave trader did ask me to count wave, to count bearish wave in a downtrend. And I replied to that trader that it is not easy to find a bearish financial instrument because the S&P 500, the financial market, was bullish since 2009. So when we go to the monthly chart, scrolling through many financial instruments, it's very difficult to find an example of a financial instrument that is trending down in a proper sense of having a bearish trend. What we are seeing was that we were seeing more about corrective wave, but we didn't see a bearish trend. But I see one recently. This is one here. Do you agree? Hermitage Offshore Services. Hermitage Offshore Services. The EPIC is PSV, Papa Sierra Victor. Now, I have counted my way. That's why I said to you the title of the video, Bearish Elliott Wave, Count Strategies Made Simpler than Before. It's very simple, right? Now, I wanted the trader to understand something. In a downtrend, the price goes down faster than it rises. Right? So you may see in the downtrend price, like you can see here, it's just going up. You may say, what is the second wave? What is the third wave? This is a phenomenon that you may notice in a downtrend. All right. So if you are in a downtrend, sometimes you may find it very difficult to even isolate. Am I speaking with my Texas accent today? You may find it very difficult to isolate. All right. The second wave or the fourth wave because the price may go down very fast. And this is a good example here. You can see only two candlestick bar on this monthly chart represent the second wave. You see. Now the fourth wave is not too bad here. So those are the things you need to know. Price usually will go down fast, very fast, faster than in an uptrend. All right. Now, another thing that I want to mention to trader in a downtrend, because this is one example I find now, but the reason why we don't have a proper downtrend is because uh, the natural progression of the market is up. The market is going down 70% of the time, isn't it? So the down move that we see very often, okay, is just a correction of a bullish trend. All right. So that's why I say to you, it's not easy to find a proper bearish trend. You may go to the hourly time frame, daily chart, talking about a downtrend, but that downtrend is just a downtrend on the hourly time frame or just a downtrend on the daily chart. But it's not a trend as a trend because the trend, usually we see the trend, market trend on the monthly chart, yes or no? So this is it. So if you want to see a proper trend to count wave on the monthly chart, looking for a bearish one, it's not easy. All right, that's what I'm saying. All right, very important. Because the market is going up more often than going down, all right, you will not going to see a lot of bearish financial market, financial instrument. You are likely to see bullish stock that are correcting, pulling back after a bullish move. All right. In a downtrend, the price going down faster. People are panicking. People are more afraid. People hate the bearish trend, and everybody is coming out. Everybody's rushing through the exit door. Am I speaking with my Texas accent today? Yeah? So they all rush into the exit door. They want to come out because most you have to understand why the price going down faster in the downtrend because most financial traders are bullish. In fact, many of those market participants do not know how to sell. I feel sorry for them. Well, they don't know how to sell. I feel sorry for them. Or they consider the bearish traders as evil. But when people say that, I say they are hypocrite because when the price goes down, they say, "Oh, the market is now oversold. We should buy." Who sold this? Bearish traders. So everybody's heading to the exit door. Okay, so you can see the stampede. Imagine of the stampede. Everybody going to the exit door. There's a fire. Or they going to the assembly point. We were rushing to the exit door. That's why the price usually in the downtrend will go down very fast. And because of the fast move in the downtrend, traders sometimes may find it very difficult to find the second way and the fourth way. Another thing that I want to say to traders, if you are in a downtrend, very important point, this is about experience, okay? We usually talk about the extension of the fifth wave. This is a surprise. Usually in an uptrend, we see it when in the fifth wave, we have the fifth wave extension in a bullish trend, okay? Yes or no? So if you have been following us for some time, you know that I often say to traders that when we count 1, 2, 3, 4, 5 waves, we draw a line. Yes, that's the warning line. We just say, okay, fifth wave with a question mark because it can be extended beyond what we are labeling fifth wave. But when we're in a downtrend, you see now that we say first wave, second wave, third wave, fourth wave, fifth wave, no stay, no idiot wave violation. Okay, all right. You see, here, I'm calling this fifth wave, and I'm happy with that. Why am I straight away happy here? Look at the price. Want to remember this because I know a lot of traders will get into trouble because of that if they forget. Okay, the price here was $7, $7. We are now in the penny share. You see, so it went horizontal for almost 2 years, and now it dropped down. You will see that very often. It's a phenomenon that you will see in a downtrend. Probably rise down very fast during the first, second, third wave, and then the fifth wave. You'll see something like this, and the price will come into the penny zone, penny below £1 or around £1, and you will usually see this kind of price action like this. All I do, I just put my fifth whip here and I leave it there because we see now 0.72 pence this one now, all right, and I just leave it there. I don't worry about the extension anymore. Why? Because there's no more room for the price, or not enough room for the price to go down more. How far is it going to go after 72 pence? So I just leave it there. But if it was in an uptrend, I won't do that. I will just draw my warning line, in fact, or make it really thick and say it can be extended. First way can be extended, third way can be extended, fifth way can be extended, and we leave a question mark on that and waiting. And then we draw our common sense trend line here like that. In a downtrend, if I see that the price almost in a penny zone, are you getting the message? All right, the penny zone, penny share. Am I speaking with my beautiful Texas accent today or not? Penny share, okay? Sometimes they say, I don't understand your accent. I'm using my Texas accent. Get used to it, please. All right. Now, don't worry too much about that, okay? This to make you laugh a bit, okay? Penny share, okay? Just leave it like this, okay? Now, I want to say one more thing that traders should be aware of when they see something like this. So everybody look at it and they say, oh, George, I like this stock. I will go and buy a hold. It's only 72 pence. It's only 72 pence, all right? It's very cheap, all right? It's a penny share. It's very illiquid. You see that that's why we don't see too much movement here. Nobody's interested in this stock now. What I'm trying to communicate to traders right now is this. Usually when a price goes down like this and it becomes very, very cheap and low like this, the first intention is to buy and hold or go wide about it. Uh, I want traders to be a little bit more intelligent. So, like I we see now, we say, okay, 1, 2, 3, 4, 5 is now 72 pairs. The only way is up. It's more likely to go up. No much room to go down anymore. But before you buy a hold, do me a favor. Go and do a fundamental analysis and perform Google Assistant. This is critical. After the fifth wave in a downtrend, before you start buying and hold and say, now it's going to go up. Yes, we're going to kick out the bearish traders. The downtrend is finished and so on. All right. You see how he hung around here for many years? All right. You want to do a bit of fundamental analysis, perform Google Assistance, and have a good reason why you need to buy and hold. Are you buying a hold just because it's cheap? If that is the case, what are you doing? You are doing a speculative investment. It's a speculation. You are just buying and you are keeping your fingers crossed, hoping that all right, sooner it will go up. That's what you are doing. You are just speculative trade, crossing your fingers. That's it. It's a speculation. So those there are people doing that. Now, another trick that you can do, you can see this is trading volume here. It's a surge in trading volume. See, so for me, talking about a more composed, a more intelligent trader, you want to check the trading volume. So you see the volume was flat, almost flat here for a year. Now we see from almost 1 million share, it's now above 4 million share. But the surge in trading volume does not mean that those people are intelligent traders. This could be a speculative trader that is buying this to see what will happen. So they may be pumping to dump it. Have you ever heard about that before? Pump and dump. Am I correct? That's it. So they may be buying low and making a lot of noise about it on Twitter and Facebook, encouraging other people to do the same thing because they buy millions of those shares. And if it went up 1 pip, they can grab some profit. If it went up 10 pips, they'll quickly sell again. So these people here could be a speculative trader. That's why I say to traders, in a downtrend like this, we see here 1, 2, 3, 4, 5. You say, all right, now buy and hold. See penny share. The only way is up. Go to Google Finance, go to Yahoo Finance, perform Google Assist test, check the fundamental. What's going on for Hermitage offshore share? Not only that, why people were selling this stuff for all this year and no one was interested to buy. Understand? Find out why. Okay, now why somebody should now decide to buy it. So we know you want to know why they were selling it and why somebody should buy it now. What has changed? Okay, is there a good reason to buy a hold? If sometime, okay, people do speculative trade, so you may say, all right, I'm going to buy, okay, some of those stock, speculative trade, $200, $300. I will keep it there for 3 or 4 years. If I get paid, I get paid. If I lose, I lose. Okay, you know what you are doing. You are keeping your fingers crossed, and you are hoping that, okay, it will bounce up and you grab some profit, and you know exactly what you are doing. So this is a short tutorial. Was it short? See, Joe, you are talking more than 10 minutes. You're talking about short tutorial. All right, this is about bearish Elliott wave count strategy made simpler than never before. Was it simpler for you? Okay, so this will conclude our discussion today. All right. If this video has been useful to you. So I do not remember the name of that trader. All right. So first I want to say to that trader, my apologies. So I explained to you why it took me so long to reply to your comment asking me to review a bearish financial instrument. I finally find one. And as you can see, I say to trader that I always take note. Now you can believe me that I take note almost 1 year. And I have it here in my book, and now I find one, and now we are talking about it. So if you put in the comment section, you say, George, you have completely forgotten me. I will unsubscribe. Don't unsubscribe. Stay put, please, because I take notes and I'm working on it. All right. It may take some time, 1 year, before we find one example. And this is a very interesting scenario. And you can see the trading volume here. So one should go to Google Finance to perform Google Asset Tech and check what one should do. And it's up to you. You buy a whole speculative trade. Sometimes people do that. They buy a hold and see what will happen, penny share, and then boom, 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 start going up. All right. By the time you know it's $20, you may make a nice profit. Sometimes you may lick your wound if you lose $200. All right, you know what you were doing. All right, you were hoping to grab thousands of dollars, but it didn't work. Okay, that's it. Okay. So if this video has been truly, truly useful to you, say George, I like it very much. All right. After pausing the video for the channel 24 in your way for almost a month, so I want to speak to our subscribers. Sometimes we pause the video for various reasons. So if I notice, I need to explain to traders so you know what we are doing. Okay, what I'm watching, we're watching. Okay, the YouTube analytics. All right, the average view per viewer. We are not talking about average view alone. All right. So, so, so if they watch it, if 12 people watch a video, all right, and we see the average view, 5 people watch it, all right, the average view will be 12. It's 12 minutes, isn't it? 5 people watch it. Average view per will be 12 minutes, isn't it? Okay. But the average view per person, all right, per person. So, so when we are saying average duration of average view, so we divide 1 hour by 5. So we say view is 5, duration 1 hour, we do 1 hour by 5. Okay, but that's the view, 5 view. But 5 view can be one person watching the video 3 times and plus 2 more people. But now when you calculate the average view per person, it becomes something different. So when I notice this, what myself I'm doing, and I see that I'm posting video, and I'm checking the average view per person is going down more. I pause the channel. That's why I keep encouraging traders to watch the video in full because it's not good for the channel. And also, all right, in the long run, if the view time is going on, that's why I say to traders, it's better not to watch the video at all if you are not interested. That's why recently I stopped posting my video straight away on Facebook because on Facebook, all people are doing, they are click on the video and go away. Those are crazy people because they are messing up my YouTube analytics. They click on a video and they go away. That's a view. Uh, they are just second. We should ban people like that. No, no, we're not going to ban them. I'm just saying it. Okay? But what they are doing is too bad because, all right. So those are the reasons why we post the channel. So some trader may say, John, you asked me a question to talk about, all right, Dow Jones. You want me to talk about Nifty 50, or you want me to talk about McDonald's stock, all right, and so on, and you are not answering me, I'll mark video down, I want to subscribe. Just stay cool, please, because behind the scene, there are other factors that we are watching. And we don't want to annoy the Google, YouTube algorithm, and we don't want to destroy the channel also. At the same time, when you are posting videos, it's like cooking, all right? It's like cooking, all right? You cook for people, they don't eat it, or they only eat half of it, or they only eat 10% of it. And you are watching. Will you cook for them tomorrow? No, you're not going to cook for them very often anymore. You're going to change the menu, you're going to try different things and see what's going to work, what's not going to work. And you're not going to keep feeding them the same thing all the time or cooking for them. You may change the menu, and if you change the menu many times and they are not still eating it properly, or they just messing up your food. Have you ever worked in the kitchen before? I was a chef before, all right, and I know how to cook. So if you see that, the chef, they don't like that. The chef, they appreciate customers that finish the food and use bread to clean the plates. The same thing we do on YouTube. I do personally on YouTube. That's why I post the channel. Another reason why I post channel sometimes is that personally, I believe that everything in life should have a rest, including channel. All right. So sometimes the channel may be doing okay, all right, meaning that okay, the average duration per person is good, all right, it's not too bad. But I may post the channel because everything in life have a rest. I need to give a bit of a warning to traders. Usually, from the 15th of December, okay, to the beginning of the year, I don't post video very much because the reason why I do that is to discourage traders to trade because it's not the best time for day trade for trading. From the 15th of December to the end of the year, it's better to go away. All right. So I don't post video. So traders also stay away from the market. Another thing that I do very often from the 1st of January to the 15th of February, I don't post very often. I spend that time to work on my website because professional traders usually at the beginning of the year, they usually come into the market not at the beginning of the year, but around mid-February. So I try to discourage traders to come into the market doing all kind of things during that time. So I don't post very much from the 1st of January to the 15th of February. So I want you to understand that also. All right, very, very important. Another thing that I need to explain to traders that sometimes want me to post video or ask me a question and they wondering, George, are you ignoring me? Or George, you are no more a friend, blah blah blah, and so on. All right, is this. I say to TSTW24 traders that it's quite challenging to day trade, swing trade, and position trade from the first of each month, all right, to the 8th of each month, and also from the 15th of each month to the 18th of each month. Sometimes I try to discourage traders not to trade. That's why I do not post videos sometimes from the first to the 8th and also from the 15th to the 18th. Just I want traders to stay away from me and also to stay away from trading altogether. And it's good for them unless they know what they are doing because there are seasons in the market. And I don't want to be posting video telling today prior to bullish signal, prior to bear signal, when normally they shouldn't be uh, exposing themselves. Right, you understand? Exposing oneself. It's not good. Every time we place a trade, there's a risk. So I'm speaking like this. Some trader may say, George, get overeat, blah, blah, blah. Uh, I mean, eh, if you have lost money in the financial market, you understand what I'm talking about here. And this is what will make you a better trader. It's not all about trading. It's about knowing what's going on in the market and being a more intelligent trader. So this will conclude our discussion today about okay what I was saying to you before. All right. Have any question or suggestion? Put in the comment section. If you like the video, give us the thumbs up. If you dislike it, mark it down. If you think it's an essential tutorial, feel free to share with your friend on the social media. So this will conclude our discussion today about a bearish Elliott wave count strategy made simpler than never before. We are the TSTW SYS008 traders, and happy trading to you all. Subscribe to our channel, 24 Elliott Waves in plural, Digi2, Digi4, Elliott Wave in plural. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Happy trading to you all. My apologies to trader, this has taken a bit of time, 10 minutes extra. Normally I should finish video around 15 minutes, but because of other discussions relating to why I pause my channels, it ended up being 26 minutes.